Question 10, we have to record the depreciation for the year. Now the depreciation is going to consist of the prior equipment that we bought in all the previous years. And you'll notice on the question it says that $80,000 represents the current year's depreciation for all that old equipment that we've purchased in the past that we're going to be able to deduct and write as an expense for this year. But we also purchased something back in question number 2. In question number 2, we had bought $500,000 worth of equipment. And that $500,000 worth of equipment we said was going to last us 5 years. And we were going to use straight line depreciation. Straight line depreciation is the simplest version of depreciation. We just divide it by the number of years we're going to use it, and then that's the depreciation we would have. But we can't forget, is there any residual value on that? Because we have to subtract out the residual value because that's what we want to be left for the value of that equipment. But in this case, we don't have any residual value. So that's 0. So purchase price minus residual value divided by the number of years that we have. So in this case, we've got to record $100,000 worth of depreciation for that equipment that we purchased in question number 2. But we also see that we have $80,000 worth of depreciation from all the old equipment too that we've got to add to that. So the total amount of depreciation we're going to record for this year is $180,000. So depreciation is treated like an expense. It's not an expense that we pay for, and it's an expense that we paid for previously, but we get to deduct now. So that depreciation expense, all expenses are debited to increase them for $180,000. And then depreciation is always credited with the accumulated depreciation account. And if you remember, accumulated depreciation is a contra asset. Contra means it acts the opposite of normal assets. Normal assets are debited. So the contra asset accumulated depreciation is credited for $180,000. And so we keep track of how much of that equipment that we purchased or that is an asset that we have depreciated over the years. That's what accumulated depreciation is. So now we've got a balanced transaction, we've recorded our depreciation, we've increased our contra asset accumulated depreciation, and we now have the answer for question number 10.